On the morning of December 11, 2008, authorities walked into a luxurious New York City apartment. Inside, they found a man who was about to send shockwaves through the entire global financial world. This man was a respected market expert, a trusted Wall Street icon, and a name that carried immense weight. His name was Bernie Madoff. What unfolded next became one of the most astonishing financial scandals in history. A story of trust, deception, and ultimate collapse. Bernard Lawrence Madoff was born on April 29, 1938, in New York City. He grew up in an ordinary family, showing no early signs of the controversy that would later define his life. There were no public warnings, no red flags. In the early 1960s, he launched his own investment company. It started small, but steadily gained a reputation. People who met him described him as intelligent, professional, and above all, highly reliable. He wasn't just another investor. He was seen as a pillar of the financial community, someone you could count on to deliver consistent, impressive results, year after year. By the 1990s, Bernie Madoff had become one of the most powerful and influential figures in finance. His reputation soared to new heights when he was appointed chairman of NASDAQ, one of the largest stock markets in the world. This prestigious role cemented his image as a master of the system. The thinking was simple. If he's running NASDAQ, he must understand how the market works better than anyone else. Trust in his name became absolute. Investors, from wealthy individuals to major institutions, flocked to him, believing their money was in the safest possible hands. He was no longer just an investor. He was a legend. But behind the closed doors of his exclusive investment firm, the reality was far from perfect. Madoff wasn't making brilliant trades. Instead, he was running a massive Ponzi scheme. The money from new investors was used to pay off older ones, creating the illusion of steady, profitable returns. The financial reports he sent out showed consistent growth, even when the overall market was volatile or crashing. For years, almost no one questioned these perfect results. Why would they? Large financial institutions, universities, charities, and countless individuals continued to pour their money into his fund. Confident that Madoff had a secret formula for success, the machine kept running, fueled by new money and unwavering faith. However, not everyone was convinced. A few sharp financial experts started raising concerns. They pointed out that Madoff's numbers looked too good to be true, almost impossibly consistent. They argued that his reported performance didn't align with actual market conditions. How could he always win when everyone else was struggling? They submitted their findings to regulators, but these warnings were largely ignored. Madoff's reputation was a fortress. The trust people had in him was so deep, and his influence was so vast, that the idea of him running a scam seemed unbelievable. The alarms were sounding, but no one was listening. Then came Monday, December 8, 2008. The global financial crisis was in full swing, sending panic across the world. Frightened investors, desperate for cash, started pulling their money out of the market. A flood of redemption requests hit Madoff's firm, with clients asking for billions of dollars back all at once. This created immense pressure that the fraudulent system simply could not handle. There was no real money to give back because it had already been spent paying other investors. The walls were closing in, and the truth was about to be exposed. The giant financial illusion was finally on the verge of shattering. 2 days later, on Wednesday, December 10th, 2008, Bernie Madoff confessed the devastating reality to his family. It was all, in his own words, one big lie. The next morning, on Thursday, December 11th, his sons reported him to the authorities. Federal agents arrived at his apartment, and Bernie Madoff was taken into custody. The story exploded, making headlines around the globe. The man who was once the symbol of Wall Street's success was now the face of its biggest fraud. The world watched in disbelief as the scale of the deception began to unravel, revealing decades of lies. On March 12, 2009, Madoff stood in a packed courtroom and pleaded guilty, accepting full responsibility for his crimes. Then, on June 29, 2009, his 71st birthday, he received the maximum possible sentence: 150 years in prison. The verdict marked the end of his freedom, but for his thousands of victims, the pain was just beginning. People lost their life savings, retirements, and charitable foundations were wiped out. The financial devastation was immense, but the emotional toll, the betrayal of trust by a man they revered, was immeasurable. The final chapter of Madoff's life was written behind bars. On April 14, 2021, Bernie Madoff passed away in prison at the age of 82. Despite massive efforts, a significant portion of the money his clients invested was never recovered. It had simply vanished into the mechanics of the scheme, leaving a trail of financial ruin that affected generations. His name is now a permanent synonym for financial fraud, a dark legend in the history of Wall Street. The story of Bernie Madoff teaches us a powerful and timeless lesson. Blind trust, no matter how reputable the source, can be incredibly dangerous. It reminds us that even the most powerful and respected systems can fail when critical questions are not asked and oversight is absent. It's a stark reminder to always think critically and remain vigilant. Thank you for watching. For more real stories that changed our world, make sure to subscribe to Historical Mystery. We'll see you in the next video.